Well, after that muffle there. Okay, the next stage we're going to look at a trade setup and an insight into what I'm looking at in the markets and what basically makes me take a trade, and also how to trade in a market crash. So I'm going to use an actual trade that I did for the service. And if we look at my screen, you should see that I issued a report on the 15th of March, and we're going to go behind the scenes of this particular trade that I recommended for the service. So first things first is let's look at the charts. So we can see that we're actually in a bull cycle at the moment, and the bull cycle was instigated, for those who don't know, on the technical side, it was instigated from an inverted head and shoulders pattern which broke out at 5,477. So this is when the technicals on the charts turned bullish. And we can see that on this particular chart, we can see that there was a nice rise from December. We had a bit of a correction in January, and then we made a double top in February. But when we declined in January, we actually found support at 5,860. At that point, that wasn't that relevant, but it did become relevant, quite a few weeks later. So we had the decline in January. We move up, and we made a double top at just above 6,100. Now, this is termed as minus development, and minus development is basically when the market hits a certain level and it fails to develop beyond that. So we can quite clearly see on this chart, this is the daily chart of the FTSE, that the market was unable to get through 6,100. So that is your first bear signal, okay? That's tick number one. We then move down, and we can see on the charts, we move down to this support line, and we can see that we tested it 1, 2, 3, 4 times. Okay, so at that point in time, that is triggering alarm bells for me. We're not making any action beyond that, and it also corresponds with the level of support that we had in January. So at this point in time, I'm making a clear note of that if markets make an end-of-day close below this level, we're going to get a decline. The reason I use end-of-day close is that is when it avoids price spikes, and for me, if the market is closing above or under a level, then it has accepted that price. The market has said, yep, we accept the market will trade above or below that level. Okay, so moving on, we then bounce up from this level of support. We have that noted, and then we move back down again, and lo and behold, we have an end-of-day close below 5,860. So at this point, I know we're going to have a decline of some sorts, but I don't think we're going to have too much of a decline because we're still in this bull cycle, and we're still in the bull cycle until I see an end-of-day close below 5,477. So for me, any decline, no matter what it's linked to, Japan or nuclear bombs or whatever, I'm not going to get bearish until I've seen the market close below 5,477. So another interesting point that I was looking at is that during bull markets, if a market corrects, it usually likes to test its moving average 200. Okay, so at this point in time, the moving average was located at 5,600. So I'm seeing that if we have a correction, 5,600 for me is a good opportunity to buy the FTSE. Okay, so we'll now go back to the actual report and the day I was issuing this. So that's what I was looking at to begin with. So I'm expecting the decline, and I'm looking at buying opportunities. So the decline starts on the 15th of March. Overnight, the market had tested the moving average 200, but it actually bounced. So on the morning of the 15th, we were trading near 5,700, and I was looking at the market retesting this, because sometimes the market likes to retest important areas if it's done it out of hours. So the report was, look for buying opportunities. This is a good opportunity to buy the market, and somewhere between 5,600 and 5,477 would be the area to get in. Now the next point is, what do I trade the market with? Okay, we're in a serious decline, the market's crashing. Do I want to use a spread bet? Well, the answer is no, because during a market crash, we talked about volatility, and the chances of a stop being hit are very high. So instead of looking at that, I was looking at binaries. Another key point is that the market also had given me two system signals. Okay, so one was at 5,920 and one was at 5,740. Now, for those of you who are part of my subscription list or have come to my seminars, will know that I combine analysis with systems. So I will not trade one without the other. So I have to have both analysis and I have to have my systems both telling me to enter a trade. So in this instance, my analysis is saying buy opportunity, and I had two system signals at 5,740 and 5,920. When I issued this report, I was actually looking at 5,920 because I didn't think I was going to get a good price for 5,740. However, what actually happened was the market opened, lo and behold, we crashed right down to the moving average 200. At this point in time, I issue an alert to my subscribers to buy the market, and the instrument was it was on bet on markets, and it was for the FTSE to touch 5,740 within 12 days time. So a nice, quite a nice period of time for it to achieve this at a price of 30, which means that for every £30 I was investing, I would get a return of 100. So the risk reward was pretty good for that particular trade setup. I will also sort of mention that when I'm doing these reports, I do give the riskier option as well, because not all my subscribers like to use binaries. So I also said that for higher risk traders, any decline down to 5,600 is a buy, and your stops should be at an end of day close below 5,477. So it turned out to be quite a good buying opportunity, and I don't know, there might be some subscribers who are still holding that trade if they went long with a spread bet. So what happened after this event? So we're long. The market did bounce at 5,600, but a couple of days, I think it was 2 days after, the market actually went down, and this was after hours. The FTSE closed, and I think there was another problem in Japan. There was some nuclear problems, and the FTSE just plummeted. Within a couple of hours, it went right down to 5,500. Now, this is a key point. We know that we're in a bull market as long as we're above 5,477, and there's not many amateur traders who would have known about that key level. They would have been focusing on this chart that I'm showing you here. This is the weekly chart, and it shows you two clear parallel lines and a clear channel with support at 500. So what actually happened was, out of hours, the market plunged down, and it just went past 500. So I would have imagined that would have clipped a lot of people who were long in the market, and they would have come out not realizing that the key point is 5,477. But for me, for the service, we're not worried about that, because A, we're in a binary, and we don't need to worry about these spikes of volatility. So that was irrelevant because it happened overnight, and by the next morning the market was actually in positive territory anyway. So again, with the binaries, you can sleep at night. You don't need to worry about losing too much in the market and these wild swings that happen out of hours. And as we know what happened after that. We've just pretty much risen in a straight line. So that was a trade setup. That's sort of an insight in what I'm looking at when I'm looking at these sort of longer term trades. And hopefully you found that helpful. Okay, John, on to the next topic.